When world stock markets react to a rising yen or slipping oil prices, viewers see dry market noise. They do not realize this volatility is the signal of Tokyo executing a calculated strategic pivot away from US dollar dependence toward an autonomous Asian bloc. This shift forces Washington into a defensive posture on capital flows and regional sovereignty for the first time in decades. The era of Japan as a passive security protectorate has ended. For 50 years, Japan operated under an informal but unbreakable rule, spending no more than 1% of its gross domestic product on defense while relying heavily on US-led dollar hegemony for economic stability. That framework held because the post-war order prioritized American protection over Japanese autonomy. Today, that era is officially dead. With Prime Minister Sanae Takaichi accelerating military buildup to nearly double spending by 2026, Tokyo has discarded its Article 9 constraints and moved from a passive partner to an autonomous economic power bloc ready to shape its own security architecture without waiting for Washington's permission. The specific numbers behind this transition break historical precedent. Japan has officially abandoned the 50-year-old informal cap of 1% GDP on defense spending. The new target is nearly double that figure, aiming for 2% within 5 years starting in August 2026. This acceleration pushes a timeline forward by 2 years ahead of schedule and marks the most aggressive shift in Japanese foreign policy since the end of World War II. It signals that Tokyo no longer views security solely through the lens of American alliance management, but as an independent national imperative driven by immediate existential threats from Beijing's expanding maritime pressure near the Senkaku Islands and repeated ballistic missile tests over Japanese waters. This strategic pivot is not merely about tanks or missiles. It represents a fundamental shift toward techno-nationalism designed to assert economic stability independently of Washington. Experts at recent panels have noted that Japan is leveraging its technological dominance in semiconductors, robotics, and advanced materials to build an Asian financial buffer. While the United States moves toward dismantling multilateral trade agreements and adopting protectionist postures, Tokyo is positioning itself as a global champion of free trade and regional currency integration. This effectively decouples Japanese economic strategy from exclusive dollar dependence, creating a framework where the yen becomes a viable anchor for regional stability rather than just a secondary reserve asset. Quick resource note: I keep a curated set of Amazon search links in the description for books, gear, and tools relevant to this channel's topics. Some are affiliate links, so I may earn a commission at no extra cost to you. Please consider supporting the channel by using those links if you find something useful. The market volatility we are witnessing today is Washington's defensive reaction to this structural fracture in the alliance dynamics. When Tokyo stops buying U.S. debt at previous rates and begins diversifying its reserves into an Asian bloc, it forces the United States into a reactive posture regarding capital flows. The financial markets are spiking because global investors are recalculating risk not based on American economic health alone, but on whether the security umbrella remains intact or if Japan is building its own independent power center that changes the balance of trade and defense forever. This is why mixed stock reactions to currency moves now carry geopolitical weight rather than just reflecting domestic monetary policy adjustments. The human cost of this new strategy has already manifested in escalating hostility from Beijing, grounding these abstract economic shifts in immediate danger. Following remarks on Taiwan's Strait contingencies made by Prime Minister Takaichi after her historic election on October 21, Chinese officials issued explicit threats that went beyond standard diplomatic rhetoric. A consul general suggested she be executed, a visceral response indicating that Beijing perceives Japan's move toward autonomy as an existential threat to their regional dominance. This reaction confirms that Tokyo is no longer viewed by its neighbors as a manageable partner, but as the leader of a counterweight force capable of challenging Chinese hegemony through both military and economic means. While Prime Minister Takaichi has pledged a new golden age of cooperation with the Trump administration, structural fractures in the transatlantic relationship are driving this acceleration toward independence. The U.S. 2025 National Security Strategy prioritizes the Western Hemisphere over traditional allies like Japan, creating a strategic vacuum that Tokyo is now filling through autonomous economic statecraft rather than waiting for American protection. This blind spot from Washington explains why Japan feels compelled to revise three major national security documents in rapid succession instead of relying on established bilateral frameworks. The United States is looking west while Beijing looks east. The space between them must be filled by someone, and Tokyo has chosen to fill it with its own capabilities rather than waiting for a savior that may never arrive. This transition forces a fundamental reevaluation of how global capital flows operate in Asia. Investors are no longer just tracking dollar strength or oil prices, but are assessing the viability of an independent Japanese financial system capable of insulating itself from US-led sanctions or trade wars. The rising yen is not simply a currency fluctuation. It is the first visible symptom of Japan shedding its role as the banker for American security needs without demanding strategic autonomy in return. By building long-range strike capabilities targeting China and North Korea while simultaneously diversifying away from total reliance on the dollar, Tokyo is forcing Washington into a defensive position regarding capital flows that could reshape regional sovereignty forever. The implications extend far beyond exchange rates or oil prices. When viewers see market volatility spike during these announcements, they are witnessing the mechanics of a power transition where Japan ceases to be a junior partner and becomes a senior architect of its own destiny. This shift challenges the post-war assumption that American security guarantees must always come with economic subordination. As Tokyo accelerates toward 2% GDP defense spending by 2026, it signals to allies across the region that sovereignty is no longer negotiable. The United States may still hold influence through existing treaties and military bases, but the leverage has shifted decisively toward those who control their own financial infrastructure and industrial base without external dependency. The strategic landscape of Asia is undergoing a transformation where economic statecraft now drives security outcomes rather than following them. Japan's move to establish an Asian currency bloc serves as both a hedge against American protectionism and a counterweight to Chinese coercion, creating a new center of gravity in the region that neither Washington nor Beijing can easily ignore. This realignment ensures that future market reactions will reflect not just economic indicators, but the underlying power dynamics of a world where regional autonomy is becoming the primary currency of stability. Thanks for watching all the way to the end. I am a one-person team working hard to make each video better than the last. Subscribe if you found value. It is the best way to show support. Drop a comment with your biggest takeaway. See you in the next video.